Welcome to the Closing Beat, a live show where we cover the stock market, financial tips to get your dough straight, and sometimes Disney World. Wait, seriously? Disney World? All right then. The Closing Beat, presented by Jazz Wealth.
Yep. How's it going here today? Welcome to the Closing Beat. Happy Tuesday, by the way. I said this last week, but is the week kind of going by quick already? Is it just me? Am I getting to that point in life where you're like, oh, where'd the year go, man? You know, I don't know. It was just January. Anyways, I hope you're enjoying your day out there. We're going to talk about the stock market here today because next week actually is the Fed announcement, right? Just like that. It seems like they happen every other week, again, leading to the, hey, things are going by so fast, I guess. But after 4 straight 75 basis point hikes, or 0.75% rate hikes there, looks like the next one's going to be 0.5%. They've all but made that certain there. It's pretty much priced in. I'll show you in a couple different ways here. The Fed is currently expecting that they're going to have peak rates right around 5%. That takes us just a little bit higher than where we're at now. And the futures market is, the interest rate futures market is perfectly pricing that in at the moment. So they're on the same page. Any change from that would spell probably a little more weakness in the market and a little bit more weakness or strength in the bond market there. So we'll see what happens there. When it comes to the Fed meeting, just to give you a heads up, because all that's priced in, it means that the focus is going to be on future projections. And I don't know if you've ever watched like on TV where they say that the future projections of what the Fed rates will be, not the amount that they're going to raise by, but their peak rate will be, that's called the dot plot. So you'll often hear them say that, like, the dot plot's changing, blah, blah, blah. That's all it is, just the future projections of rates there. I don't know why they use that word. It's because they can itemize it by Fed member and all that stuff. But I get why they use it. It's just a little bit confusing, right? So anyways, that's what we have going on there. As far as the markets go here today, let's see if we can go on over to maybe this page here. No, we're going to go to this page. How about that? We have the S&P lower 4 days in a row. There's no way around that. 4 days in a row, we're down 7 of the last 8. The only positive day inside the last 8 days was when Mr. Powell was speaking there and be really confirming the half-point rate hike there. Isn't it kind of fascinating that the whole market, $35 trillion worth of market cap, is responding to this blue line that we posted on this chart months ago? Right? It's the downtrend. It's the technical area of the downtrend there. It's pretty fascinating there. It's a man-made area that people are respecting, and until they stop respecting it, we have to expect that it's going to stay that way. It's now the 61st day where the stock market has lost more than 1% in this year, and by the way, that's kind of a record. That's 3rd place all time, so really think about this for a second. You're living through one of the most volatile years that we've ever seen. 2008 is the record, and 2002 holds 2nd place. This is 3rd place. So if you just started investing this year, way to go. Hang in there, because this is almost as wild as it gets, believe it or not. I mean, it almost doesn't feel that way, but incredible. So if we go over here, let's take a look at what China's doing to us. The reason the market has lost a little bit of steam is because there is a ton of money going over to the S&P equivalent of China. Right, so their version of the S&P. If you look back just over the last 30 days, here's the performance in red of the Chinese market. I'm using the FXI if you want to participate here. Very strong, lots of money going there. What happened? Our market stopped going higher right at the time that theirs bottomed. So that's just showing you money is just focused over there elsewhere. Right? We're using money over in that international space right now, emerging markets, although we could debate that. That's where the money's going. So a real clean and clear picture of how the Chinese markets are getting all the attention right now. This is actually huge sums of money moving over there, causing this to happen. Not U.S. dollars in all, but just giving you that example there. As far as the S&P goes here today, every sector but utilities were lower on the day. Let's go over here real quick and just give you a look. Well, I said utilities, so let's start with that one. So utilities, small gain on the day. At one point, every sector was lower on the day today. But look at what's going on here. Rates are moving lower. Remember, we talked about this. So I'm going to jump just ahead a little bit here. The bond market is continuing to confirm, or at least confirm their beliefs, that the economy is getting weaker. And maybe we do have a recession there, but it's going to cause the Fed to ease their, not stop their rate hikes, but actually start cutting sooner than expected. Late 2024 is the current projection there. The bond market says, no, the economy can't wait that long. And that's why you see the bond interest rates moving lower and prices of bonds moving higher. Remember, they're inversely correlated there. So really interesting there. Of course, that's helpful to the utilities, real estate, some consumer staples, things like that, that really sort of thrive on having lower interest rates. If you look around elsewhere, you're going to notice anything in that communication services, tech space there, all week on the day. I will point out that energy has pulled back. I want to cover that here in just a second. Looking around, you're just going to find a bunch of red regional banks after yesterday's, being almost the worst industry in the stock market. Today, continuing a little bit lower. What was once strong, basic materials, seeing a little bit of a pullback there. That would go on a list, by the way. So is that a bullish pullback, or is that the end of this rally? Because that's outperforming. So you want to look at basic materials and industrials, by the way. We mentioned that numerous times. Those are the two outperforming sectors right now. So you want to measure that pullback and see, is that something I want to participate in, or is fun time over, essentially? Be what you're looking at there. If I go back to the S&P here real quick. Quicker? There we go. This is a tough spot. Do you buy here? Do you run away? Like, this is one of those indecision zones in the stock market. You hope for a buyable pullback. That's my perception of what's going to happen there, but that's an opinion, not anything based on data. And so you hope for, hey, we get a nice little pullback here, we find out it's buyable, and we can buy a little bit before we break out of the downtrend, so we're getting ahead of the curve there. But again, the nastiest four-letter word that you can say in the stock market, it's not what you think, it's hope. The second you start saying hope, the market knows you've lost, right? So that's what we're hoping for, but we'll see, right? Right now, people have the mindset of, oh, maybe this is going to be a recession. Maybe this isn't so strong here, right? I will maintain that the lows here should probably be an area we don't touch, and then that people get excited about buying this pullback before we actually get there. But again, it's a really, really tough place to, right now, like right this very second, to say, yeah, I'm in. That's something I'll deal with there. Let me see. I do want to go back over here if I could just show you real quick. In our notes from Jazz, so it's a weekly email that we do. You can kind of see all the different ones in there. I'm going to point out this one in particular on October 2nd. We talked about Michael Jordan's house. Made a great reference to his house and the stock market and how that works. Real simple lesson there. But what we talked about was the market being in a position where it was too good to pass up if you're a buyer or someone who's been wanting to invest. So we went through that example, and I actually gave you the data on that to show if we continued to fall, the odds became greater and greater, over 90%, that the market would actually bounce based on history there, how often the market gets oversold. So we actually, on October 2nd, we actually went through and explained why the market was going to bounce. That was actually the name of the Notes from Jazz email there. And that's a great but very, very simple lesson to see extreme depths in the market, why they're a reason to buy. Now, I'll go back over here. This is not an extreme depth. This is a sit on your hands moment, right? It's a moment to go, okay, the downtrend still wins. The long-term, all year long downtrend, although we've had double-digit bounces, double-digit declines, double-digit bounces, right? Although we've had that, the downtrend still wins for the moment. If you want to be a hero, you buy the pullback, you look for your opportunities there, maybe in the relative strength sectors, if I had to give you a hint. But for now, the downtrend wins. You're making the bet, if you buy this pullback, that it's going to break, because there's nowhere else to go. Right? If it starts bouncing from here and you decide you're going to jump in, you're not betting on a move from here to here. Nobody's going to do that. You're betting on a move that's from here back up to 4,300. Right? So you got to have that risk appetite there if that's something you're looking to do. I know there's a lot of you out there that are risky. The NASDAQ back down to about down 30% year to date. Remember, this is the worst performing index of all of them. And you can understand, right? If you look at like the communication services today, it was one of the weakest areas. Apple had a horrible day. We can go through individual stocks, but it is what it is there. Crude oil, almost about to make new lows. Not for the year, but just recently, new lows here. Crude oil is taking the approach of, wait, the economy's weakening? We believe the bond market. That's essentially what crude oil is saying. We believe the bond market that the economy is weakening, and so maybe there won't be as much demand for this oil. Maybe the fact that OPEC is cutting production, that won't actually hurt anything. Oh, okay, cool. Maybe they're making the right decision there. That's why you have the price of oil moving a little bit lower right there. Remember, we shared this yesterday with you here. The economic indicators, there it is. Economic indicators here, if we take the aggregate of them and take the net positive or negative there, they are looking like the southbound end of a north-facing mule. And I'm from Texas, so I say things like that, right? It's, in other words, if you're a city folk, it's not looking good. And so what we have here is all the the majority of economic indicators are trending lower. Okay, well, even if some of them are a little bit off, or maybe we have a bias as to how they're calculated. One of them is calculated by just simply sampling 100 people. Is that enough people? I don't know if that's enough people. But we have most of them agreeing that things are getting weaker. And so that takes all the opinion out of it. We can look back and see, oh, there was a recession last time this happened. Where else? Oh, that was a nasty recession right there. Oh, God, that was a nasty one there. The .com bust. Yeah, we don't like to see things like that. So not looking good there overall. I do want to point out when we go back to oil here, because I just got a little bit off track for you. When we pull back, take a look at oil, what's happening there? Did you remember the lesson? I want to go back real quick and just share this with you here. So I love sharing lessons ahead of time instead of telling you, I told you so. Yeah, I said it somewhere. Just go back and look. No, we actually covered this specifically. Look, remember the divergence between the price of oil and energy? And we talked about how that spread widening. It's not good. It's not good for any stock, any sector, any correlated pair that you want to look at. You can't have it. You can't have Home Depot going one way and Lowe's going the other. See what I'm saying? That spread causes a trade. People look at that as a pairs trade. You guys know what a pairs trade is? So I'll probably we'll hang out. We'll do this after Jazz After Dark sort of thing. We'll talk about pairs trading there. But what I wanted to show you was, look at that spread tightening up now. It hasn't even been a month. What's happening? Energy has chosen to come catch up to oil. Not to say that oil hasn't fallen too, it clearly has. But energy has said, no, we'll come meet you. Don't worry about it, oil. You go where you got to go. We'll come and meet you. That happens more times than you like. So you really want to, if you're an active market participant kind of person, take a look at the concept of, why do I always bet on something going up or down? That seems sort of black and white, doesn't it? What if I could pair some trades together and make it where the package profits based on two things happening rather than one thing? I'm not talking about using options either. So maybe I'll cover that tomorrow night in the Jazz After Dark there, because, well, that sounds like a good idea. All right. What else do we have? Hey, let's go over here real quick. Let's look at some stocks in the news. All right, how many of you own Buckle? A lot of you. We've been in and out of it over the years. So Buckle, we happen to own it, so this is why it's come up. Buckle is paying a $2.65 per share special cash dividend. So if you own those shares or plan to own those shares, remember the stock will drop by $2.65 when we hit that ex-dividend day. But they're going to pay $2.65 given the rally that you've seen lately. Nice. That's awesome. That's a special dividend. It is taxable, by the way. But you know, who's complaining? You take home a net $2.15, something like that, just for fun. Thanks, Buckle. Pepsi. You might have noticed a little weakness there in Pepsi here today. They're the latest that's a non-tech company laying off people. If tech lays off people like we saw with the, Amazon and all these people, Alphabet, they were laying off a bunch of people. Well, we know already that they overhired. Well, Twitter's a great example, right? Everybody's making fun of Twitter because it's like, how do you get rid of 75% of the people and yet Twitter still runs? I don't know what the answer is, but the point being, tech really overhired. The world rushed towards getting tech jobs and getting skilled for all that stuff, and that's awesome. But when it starts to bleed into, Pepsi's laying off people, that's supposed to be a slow, stable, kind of immune to the economic cycles a little bit, right? When they start laying off people, that's a little bit of bad news. It was actually bad news for UPS as well. That continues to move lower. UPS, remember, is a barometer of the overall the economy, right? If UPS is delivering packages and that's all we do is we just ship packages back and forth these days. If they start delivering less packages, well, there's a problem, right? Same thing with Walmart. We all go to Walmart. If we stop going there, whoa, that's a problem. So if you want to know what stocks to watch really closely and maybe specialize in. All right, Taiwan Semiconductors, they are spending a whole lot of money, actually, $40 billion more to spend here in the U.S., actually, to help us build some more advanced chips. There's actually a lot of that news going around today. I didn't catch all of it, but that's a lot of money they're going to be spending instead of what? Remember, these lessons, they keep coming, right? What should a company be doing if the economic cycle is getting weaker? Let's see if I can find it fast enough. Who's with me? You know, I'll let the stream catch up. Maybe you guys can probably guess by the time I get to it. Should you be spending more money? Should you be giving money back to shareholders? Should you be investing in R&D? What should a company do during this time? And if I don't find it, I'll just get out of your way here because that's not fair to take your time. I think I just found it. Nope, that's not it. Sorry. Man, we have a lot of data here. What should a company be doing? All right, so I'll just move on then. A company should not be growing when the economy is getting weaker. In other words, investors don't want to see you doing that. Investors want to see you returning money to shareholders. Investors want to see you strengthening up your balance sheet a little bit. And I can't believe I don't have it there. Oh, here we go. See, stall enough, you get what you need. Oh, what do investors reward? They reward dividends, share buybacks, cash returning to shareholders is another way to say that there. They don't reward R&D, growth, M&A, spending money to grow, CapEx, right? They don't reward that. So what happens? Oh, the Taiwan Semiconductors coming over here to help us with our chips. Well, that's nice of you guys. Thank you. It's not going to help the stock price because that's not what people want you to do with your money. Stocks do not enjoy that. So a little carryover, trying to layer the lessons. So we go back. If you missed something, hey, you know, there's a whole explanation on how that works. AutoZone down about 3% here today. Earnings were better than expected. Margins were the issue there. One good piece of news is they are buying back shares faster than they expected. They were expected to buy back 600 million shares. Turns out they bought back about 900 million shares there, $900 million worth of shares. So, yeah, you know. United Airlines with a little bit of a breakout there. Apparently the business travel is just kind of not really growing anymore, starting to kind of level off there. But they said, don't worry. We're still going to make a profit. We're still going to see our margins rise. They were very positive about all that stuff. And so there you go. That's what happened with them today. Obviously, that's good news for United. Yeah, that's all I have there. What else do we have? Hey, tonight on All That Jazz, we're going to cover, we'll save tomorrow night for the idea of advanced sort of trading, investing strategies kind of thing. But tonight we're going to cover, you have an HSA. How many of you have like an investment account and you just take whatever the sort of normal approach is? It's a 401k, put 3% in, put money in up to the match. How many of you go further and say, there has to be some fine print rules in here? Well, the HSA has lots of little things that you can do besides just throwing money into an account and getting a little break on your taxes. Oh, we're going to cover the nitty-gritty here tonight. So join me tonight if you're interested in that. And if you have any questions, I will take a shot here and try to answer questions. Cody, do you have a question? Is a pairs trade like a parlay? Yeah, kinda. You need both legs to hit? You do not? You would prefer to. It would be better if both legs hit, but in reality, you don't. So it's not 100% like it, but you're thinking along the same lines there. Nice. Did you really have that question, or did I just know? I just knew. HSA Ninja here. There you go. So since money's getting tighter, and we're not even feeling it yet. Money is getting tighter and tighter by the day. Since that's happening, I'm going to focus on things like, okay, we need to go deeper. Well, the Augusta rule, or you can hire your kids to work for you. All that TikTok garbage you see, that's top level stuff. We want to dig deeper in there and go, how does that really work? Okay, an HSA, what are the tricks, Dustin? You got some tricks? I put money in an HSA and I, take it out, do what I got to do. You got some tricks for me? That's what I want to do. I want to go a little bit further there. Yeah. And Chris has got it right there. I mean, the 401k, that is a no-brainer. That's 100% return on your investment, right? If you get a company match, count yourself grateful, because a lot of companies have not put back their matches. One of the fun things, in a little talk here for a second, one of the fun things about having so many clients all over the United States, I very quickly get to find out if Raytheon cuts their match, because that's not like headline news or anything. What Walmart does, all these different companies, when Red Hat was bought by Oracle and stuff, I get to find out all these little things ahead of time. And so I can tell you that if your company has a match in your 401k, count yourself lucky. You got to take advantage of it there. Yeah. You're very welcome. I appreciate you coming by and hanging out there. Yeah. So you got the FSA as well. That's a little different, right? So, that's typically more on the employer side. So it's still a good deal there, but we're going to focus on the HSAs, give you the goods there. I'm not a big fan of the FSA, but if you're getting money put into it, of course, yeah, you got to use it. Can oil and gas companies grow if they've already shored up their balance sheets the last 2 years? Yeah, absolutely. You see a lot of them already starting to say, more dividends. Let's just pay more dividends. Let's buy back a few shares, things like that. Warren Buffett was the first to catch up on that publicly anyways. And so, yeah, definitely so. Especially if they could just pull back into the end of the year, you'd get a little bit more meat on the bone for people that have been sitting there watching it go for a while and want to be a part of it. Have we made any videos on the effect of charitable contributions on your taxes? I thought about covering that. I just didn't know how far. Yeah, it's tough to gauge. What's the problem? QCD strategy to reduce your R&D tax liability. Oh, well, thank you for that. That's nice. So Eric, I'm being told, has done a video on QCD strategies for who? Anybody in particular? Oh, for reducing your RMDs and stuff. So a little bit, touching on that there just a little bit, that would be Eric. But if you feel like you're just pre-retirement, pre-RMDs, and you're like, I want to give some money, I could use an example of what I do and then kind of share how that works. So I can talk about it. I like to talk about it anyways. So yeah, we could do that. Yeah. That's a nice way to say it. The inverted Santa Claus rally. Remember, what are the stats on that? What's the data say? You guys want to have a little friendly end of the year bet? And by friendly, meaning I hope I win? Let's try something here. Did we not just talk about... Oh, I put it in the notes from Jazz. I'm going to share it with you. Give you guys a little special treat here. Wouldn't be this last one. Let me go right in here. So Santa Claus rally, huh? Oh, come on, Dustin. Where's it at? Santa Claus rally. Darn it. I'm going to find it. Hold on. Hang with me. Oh, here it is. When does the Santa Claus rally really start? Would it be right for the rally to start now, or would it be right for the market to sell off now and wait until the middle of the month? This is the average performance by day of the, so we're looking back 40 years. This is the average performance by day and then plotted over 40 years. So average performance of December 1st, 40 of them. The average performance of December 2nd, 40 of them, right? Or 39 and 38 if there was a weekend in there. And so it's actually quite normal for the stock market to fake you out in the beginning of the month, then spend the rest of the year going up. So there you go. You guys already guessed it there, right? Mid-December. Ah, perfect. You guys know. You see what I mean? I love it, man. I love it. Look at your magic 8 ball. I don't have a magic 8 ball, so I don't know the answer to that. I don't believe in a magic 8 ball. I mean, I've had them as a kid. For anybody that's old enough and can relate to that, but nope. Stopped using that years ago. Wasn't getting the answers I wanted, so I had to move away. Yep. The unknown is if we have a rate hike this year that we haven't had in decades at the same time. A little unknown. We do know what the last hike is likely going to be, and there's no data. There's no real data that would come out that the Fed says they like to look at that would change their minds. So I feel like that's probably a given there. Let's see. Rate watch. Let me see what if the stats have changed there at all. So currently looking at a 77% chance that they do a half-point rate hike, only a 23% chance of 3/4 of a point. And there's no wagering going on for anything other than that. So you still got some stragglers out there that say, no, they're going to do it. They're going to go up 3/4 of a point. I'm a human trading almanac. I don't know. Yeah, I don't know. It's funny. My wife is like, you can't remember to put your clothes in that laundry over there, but somehow you're just spitting out all this garbage. So she might disagree with you that I'm good at remembering stuff there. Anyways. Okay, I'm going to wrap it up there. You guys enjoy the rest of your day. Do we have the thing? Yes. I was thinking this earlier. I don't know. Do you wish someone a happy holidays, Merry Christmas, Hanukkah? Like, I don't want to leave people out and stuff, so I thought about it, and I'm like, who can I get to best explain to you guys how I want you to feel around the holidays? So got somebody here special for you. I wish you a great whatever in the world you're celebrating, and we want to cover all that, so here we go.